Hey everyone, welcome back to Corporate Decoder, the place where we decode the whispers of big business. Today we're diving into a filing that has got some interesting moves, and let's just say not all of them are about making a lot of money right away, but more about setting up future opportunities. If you like getting straight to the point on what these corporate reports really mean, make sure you're subscribed. And hey, we've got a really active Discord community linked in the description below, so join us there to keep the conversation going. We're looking at a document from Qualigen Therapeutics, Incorporated, and the ink is barely dry on some of these deals. They're announcing some fairly significant financial restructuring and investment, and it is not exactly a small sum. When companies make major announcements like this, it is usually because they're trying to make big changes, which can be very good or very bad for shareholders. This is basically telling us this is a formal report required by the government to keep everyone informed about what's happening with the company. Think of it as an official status update. This is our company of interest, Qualigen Therapeutics, Incorporated. They are in the business of developing new medical treatments, and like many companies in this field, they often need significant funding to get their research and development off the ground. This tells us where the company is legally registered, which is Delaware, a popular state for incorporating businesses in the United States. This is what most people think of when they hear stock, the regular shares of ownership in the company. The par value is a tiny, almost meaningless number used for accounting. They are not currently identifying as an emerging growth company. This means they are perhaps a bit further along in their development or choose not to use the benefits afforded to newer, smaller companies. This is where the real meat of the story begins. This section deals with really important contracts and deals that the company has entered into. This is a way for companies to raise money by selling their securities directly to a select group of investors, not to the general public. It's often done quickly and with less regulatory hassle, but it usually means the investors get a bit of a discount or special terms. Alright, here is the big news. Qualigen Therapeutics, Incorporated has just closed a deal where they raised a massive $41 million from investors. One of the key players here is Faraday Future Intelligent Electric, Incorporated, which trades under the ticker FA on the Nasdaq. This is a significant amount of money for any company, especially in the biotech space where research is expensive. So how did they get this $41 million? It was just cash. They sold actual pieces of the company. They sold over 337,000 shares of their regular common stock, and also some new preferred stock, which they call Series B convertible preferred stock. Preferred stock can have different rights and privileges compared to common stock. They sold their common stock for $2.246 a piece, and the preferred stock at a much higher value of $1,000 per S-share. This difference in price hints at the different nature and potential benefits of the preferred stock. Now, what are they going to do with all this money? It is always a crucial question. A good chunk, $6.8 million, will go towards paying off debts and keeping the normal business running. But the really interesting part is that the rest is going to be used for establishing cryptocurrency treasury operations. This is a bold move, showing a clear interest in exploring digital assets, which is quite unusual for a biotech firm. This just means to release a separate document detailing exactly what this Series B stock is all about, its rules, and what rights it gives the holders. This Series B stock is special because it can be changed into regular common stock. The formula here tells us how many common shares you'll get for each Series B share you hold. Importantly, the conversion price they're using is the same price at which they sold the common stock, $2.246. However, there is a catch. This conversion can only happen after the company gets approval from its shareholders. This is a common requirement when a company plans to issue a significant number of new shares, as it can dilute the ownership of existing shareholders. They need to make sure they have the shareholder go ahead for this. They are committed to getting this shareholder approval within a month, by the end of October. If they have to call a special meeting, they have to keep holding them every 90 days until they get the nod. This shows their eagerness to move forward with the plans tied to this preferred stock. This means that the shares being issued in this deal are not registered with the main government securities regulator. They are relying on an exemption that allows them to sell these to specific investors without going through the full, lengthy registration process. This is the date when the deal was officially finalized and the money and shares officially changed hands. This section talks about the brokers or agents who helped the company find these investors and make the deal happen. They hired a specific firm, Univest Securities LLC, to be their main agent in finding investors for this $41 million offering. As payment, the placement agent gets a 5.5% 10% cut of the money raised, which is a substantial fee. On top of that, they also receive warrants. Warrants are like options that give the holder the right to buy company stock at a set price in the future. In this case, they get warrants to buy 6% of the shares sold, with an exercise price of $2.47. This means if the stock price goes above $2.47, these warrants can become profitable for the placement agent. The company also agreed to cover some of the agent's expenses, up to $150,000. This is pretty standard, but it adds to the overall cost of raising this money. This agreement is important because it deals with how certain shares will eventually be made available for public trading. This means that Qualigen Therapeutics Incorporated has promised to file documents with the SEC so that the common stock and the convertible preferred stock can be legally sold to anyone in the future. They have a deadline to file it and another deadline to get it approved and effective. This is crucial for investors who might want to sell their shares later. This section details a special deal with the main investor, Faraday Future Intelligent Electric Incorporated. This agreement outlines some significant concessions to the lead investor. They're going to adopt a specific policy for managing their assets, and importantly, the lead investor gets to appoint 2 members to the board of directors. This means they will have a direct say in how the company is run. As long as the lead investor holds at least 5% of the company, S-stock, they maintain the right to appoint directors based on their ownership percentage. This gives them substantial influence. If a director nominated by the lead investor doesn't get elected, the company has to expand the board to make room for that nominee. This shows how much power and say the lead investor has in the governance of Qualigen Therapeutics Incorporated. This is a direct impact on the company's leadership. Jiawei Wang is being appointed as a co-chief executive officer, and Koti Meka is becoming the chief financial officer. These are key positions, and these appointments are a result of the agreement with the lead investor. Even if their ownership percentage drops below 5%, the lead investor will still have the right to attend board meetings and observe. Though without voting power, this ensures they stay informed. These are agreements where existing shareholders promise to vote their shares in a certain way. Here, specific holders of another type of preferred stock have agreed to vote in favor of the shareholder approval needed for the deal we discussed earlier. This significantly increases the chances of that approval going through. This section describes an agreement for consulting services. Qualigen Therapeutics Incorporated has hired an advisor to help them with their capital raising and financial strategy, particularly concerning this recent offering. For their advice, the advisor will be paid in stock. They will receive about 60,000 shares of common stock, which represents about 5% of the company outstanding after the deal. Paying advisors in stock is common, but it is another way that the number of outstanding shares increases. This is basically a disclaimer saying that these are just summaries of the agreements, and if you want all the nitty-gritty details, you need to read the full documents themselves, which are included as exhibits to this filing. This section addresses the sale of company stock that did not go through the usual registration process. This just points back to the earlier section about the private placement offering. It's saying that all the details about the shares sold, the preferred stock, the warrants, and what they can be converted into are already covered in item 1.01. This is for any other important things happening that don't fit into the other categories. They also released a press statement about the closing of this deal. It's common practice to announce major financial events publicly. This is just a list of all the documents and attachments included with this report. This is a table listing all the exhibits. We see the actual agreements like the subscription agreement, registration rights agreement, lead investor agreement, and advisory agreement. This is the official signing off section of the report. The date the report was officially signed, and signed by Kevin O. Richardson II, one of the leaders of the company. Now looking at this filing, Qualigen Therapeutics Incorporated is making some really big plays. They've successfully raised $41 million, which is fantastic for any biotech company that needs capital for research and development. The move into cryptocurrency treasury operations is bold, and definitely something to watch. It could be a way to diversify their assets and potentially tap into new funding avenues, but it also carries significant risks. The involvement of Faraday Future Intelligent Electric Incorporated as a lead investor and the subsequent board appointments and leadership changes suggest a strong partnership and a shift in strategic direction. This infusion of capital and the new partnerships are clear strengths. However, relying on shareholder approval for crucial conversion rights and the significant issuance of new stock and warrants to placement agents and advisors does create a dilutionary effect for existing shareholders in the short term. The company is essentially paying a premium in equity to secure funding and strategic partnerships. We need to see if this investment leads to successful product development and if their digital asset strategy pays off. My take is that this is a high stakes gamble. The company is betting on innovation and a forward thinking approach to finance. If they execute well, they could see significant growth. But the risks are substantial, especially with the volatility of cryptocurrencies and the long road of biotech development. The direction seems to be towards aggressive growth and innovation, but it comes with considerable risk that existing shareholders need to be aware of. Alright, that is our breakdown of Qualigen Therapeutics Incorporated S latest filing. What is your take on these numbers and what they signal for the company? S Future, do you think the crypto move is genius or risky? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don, don't forget to join our Discord in the description below to continue the conversation. Thanks for watching. See you next time.